Hello crypto enthusiasts, and welcome to another brand new video. And if you missed my previous video, I actually talked about is the future of digital, which was a very interesting video, and if you would love, I'd like you to check it out. And today I should be talking about something very I'm looking for the word amazing. It's amazing too much. Super interesting, sploofic. I don't know, probably looking for the words to answer it. Okay, but we're looking at least we know what Paribus is actually. Now Paribus is a cross-chain borrowing and lending for NFT, liquidity position, synthetic assets, building for the Cardano blockchain. Actually, I'm going to talk about two important things in this definition. That is the NFT and the synthetic asset, which is really important for us as crypto enthusiasts here in the Paribus platform. And I'm not gonna waste your time too much, and if you like this video to the end, I hope you give it a like and also subscribe and turn notifications on, because I'll be dropping more videos every single day and you don't want to miss any single one of them. Now without further ado, let's go into the video, and I'm gonna explain every single thing about this and try to make you understand, read as much as it is possible so you get to understand and know about every single thing and what Paribus is talking about the NFT and the synthetic assets itself. Alright, let's go in. Now this is it. Okay, this is how it looks like. Now if you look at, I think this is this picture right here, I think this is kind of like a Roman kind of empire, something. It looks like Marcus Aurelius. Yeah, that's how his face looks like, and kind of make it like an NFT. It's nice actually. So first, let's go into this. Now they said the fungible and non-fungible token. Now tokens are blockchain assets which are managed and housed using cryptographic addresses and smart chain contract technology. Many of them share the same properties and can be categorized under a common standard, most noticeable ERC20. Now a lot of you who are new to the space will not really understand what ERC20 means. Now I'm going to explain what ERC20 is to a lot of you. Now ERC20, this is actually a protocol standard for creating Ethereum based token. Alright, the protocol standard for creating Ethereum based token which can deploy or use in Ethereum network. Alright, these are those tokens that are actually used in Ethereum network, which is pretty much it. So if at least if you are starting crypto, you come across Bitcoin, Ethereum, which are the top two tokens out there at the moment, and other tokens actually, but they are the top two for now. So at least that's what an ERC token is. Okay, now let's continue. Now ERC tokens are fungible and are easily exchanged like for like. Okay, they're fungible, you can see it, and they're easily exchangeable like for like. Now they are largely responsible for the asset class that is crypto as alien. They mimic money in the sense that they are used the same way as money is used. Alright, it's the same thing, but with preferred features such as censorship, resistance, and non-inflammable supply. Alright, now on the other hand, non-fungible token or NFTs have varying sets of properties and a uniqueness which makes them probably alright, one of a kind. One cannot trade one for one, which one Bitcoin is always one Bitcoin. Thus NFT can have associated values which alone a marketplace can define. Some examples of these NFTs that have market value are digital assets, virtual lands, music, crypto collectibles, customizable gaming rewards, in-app use, domain name, Ethereum name services ENS, and the smart contract insurance policy. Those are the things up to seven of them which is there. Now what speculators what am I saying will be interested in naming price and having a fluid exchange, the existing opportunities to do so are largely lacking. DEX and automated market making solutions do not currently offer implementation for the exchange of these unique assets and have been relegated to static ownership until sold on the P2P market. Now, as compared to, actually, we're gonna look at the the P2P market. Okay, let me probably make you understand what the P2P market is. Now, P2P market is a place in which you sell your token. All right. So mostly the largely sold token on the P2P market is the USDT. That's the largest, or you can, I think, also the BUSD. If you're using the Binance blockchain, is also one of them. So USDT is centralized in all crypto spaces and blockchains and apps. All right. So that is what P2P is. A lot of have this, so you want to exchange your token for physical cash or for any other thing. Now also, let's look at the synthetic assets. Now, compared to the traditional asset market, the non-fungible token NFT ecosystem is severely underdeveloped in both application and market caps, largely due to immaturity and market size have become difficult to quantify. Right. Now, since the advent of the CryptoKitty, now CryptoKitty came out, it's very amazing. Now, CryptoKitty is one of the first blockchain games, right? It's one of the first blockchain games now, which you can breed your cards to create perfect collectibles and every other thing. You can also trade, actually. So that's one of the first blockchain games out there. Now, NFT have been lying in wait, quietly building, and in recent months have filtered on the precipice of exploding. Higher profits projects with real world ties have come to market, with many more on the horizon. Now, to pundits, we have yet to scratch the surface. In the art world, the fundamental argument that NFT are the only tamper-proof, fully verifiable assets on the planet is not unsound. The application for the more vigorous, which are real estate, that's virtual lands, and even financial products wrapped as NFT, have more tangible merits and immediately uses cases. That's something that we need to actually look at a lot. Now, the market has had a lot of ups and downs lately, and a lot of things that have been affecting it and bringing it down and causing a lot of things so far. So that the NFT have more tangible merits to it, and it's really nice if you can put that into perspective. All right, now we have seen progress in many ways. All right, there's a lot of progress that have come in the crypto markets and in the NFT space and synthetic assets and every single thing. Now, we have seen progress in these ways. Most have missed out on these opportunities. Now, for example, wrapped crypto kittens are available in Uniswap. For roughly 2 years, there is currently a wrapped kitten pool. Now, the beauty of the synthetic asset is the ability to be both individuated and bundled. Now, wrapped kittens can be traded for the WCK token. Now, and I'm also going to ask what's the WCK token. Now, this is a it's called the wrapped kitten. Okay, it's wrapped kitten. Okay, I don't have to put it. Okay, wrapped crypto kitten. Okay, that's how it is. Okay, that's what the WCK is actually, the wrapped crypto kittens token. Now, while it is perhaps ahead of its time, the application and progress of the inevitable has been upon us for some time. Now, what experts have stated for some time now is that there must be opportunity to leverage these assets, and that is what they actually did. They leverage assets as crypto has evolved into debt market for a number of altcoins. Now, for the NFT universe, it really comes into us. This NFT needs to be collateralized and borrowed against or even leased. All right. Now, valuation metric. Let's actually look at what the valuation of all these NFTs and things of this, the asset and everything. Now, traditionally, valuation are derived from historical purchase and probability that exists in the fluid marketplace. Moreover, the value is dominated in agreed upon currency. NFTs actually do not have this history and may be valued against USD or Ethereum or any number of assets, creating a moving target out of a moving target. All right, essentially, NFTs need price discovery, and certainly there is happening as the numbers of enthusiasts and subject matters experts grow in consent with the rising number of speculators. Now, in due course, the market will ultimately determine the value for sure. That is the lending and borrowing power of an asset, which adds to the importance of creating a market. Now, fair value is determined by fair market, right? That is clear as day. All right, if you have a fair value of something, the market is gonna be very clear and understandable. So a lot of things needs to be in consent with each other. Now, Paribus NFT loan market could go a long way in determining the realized value of NFT and crypto. Is an ideal breeding group as it brims with risk-loving speculators. Users can ultimately determine the exchange currency, the loan duration, the loan to value ratio and interest. The rare items may have concession values, but it's worth knowing what someone is willing to lend it and how long. In due course, water your finest level. Alright, now let me explain this place a little bit. Now, we know that things have been going on lately in the market and things have been going up and down. Now, Paribus is a lending platform which you loan and borrow NFTs and every single thing. So they say they're willing to do this, but you need to know how long the person who is lending or the person who is borrowing is gonna keep the NFT for a while. So it depends on the both parties. They need to come in together. So while it's kind of like a little parables or kind of like a little poise to understand. Now, while this thing is going on, everything's gonna balance up. No matter how the price has gone up, the thing has done this, and the valuation of the NFTs and this net market is gonna come into play, and all its assets is gonna level up and become plain. Now, don't be much valuation of anything. Now, let's look at the listing NFT. All right, before we round it up. Now, the ability to rent out an NFT has granted interest and portends a large marketplace. While it may initially inspire the opportunity to try out new things, experiment with games, or deploy capital, leveraging alternative assets is considerable given a modicum of efficiency in the market. Now, the evolution would likely mirror the loan markets with added emphasis on the characteristics of the asset. Now, current trends and market determines would like exert great influence on the market. While Paribus is following this development, they are actually following this development very well. They say while Paribus is following this development, there are many variables to consider, so the duration of lists and the willingness to subject them and subject to themselves to what would like to be customized agreements until the market takes shape. That's really nice. Now, in conclusion here, now they say the market support for NFT is growing asymmetrically, all right, and they desire their seats at the Defi table. Now, lending and listing marketplace will drive income generally, opportunities for holders, all right, and they're gonna verify assets. Paribus believes that in time the NFT market will find fair market value and become as liquid as most tradable cryptocurrencies. That is amazing, and this is a very huge step for the future actually. So we're gonna look at a lot of things now. The powering synthetic, all right. Now, traditional lending markets silly individual, thus limiting available resources and products. Now, Paribus tools the collectible resources of participants to create single resources in order to amplify liquidity and create vibrant market space. All right. Now, while non-fungible token for great copies, there is a need for fungibility that can gather and pool resources. Now, flexible deposition, withdrawal, selling, buying, borrowing, lending, and actually are created instantly, and all this accumulates to become something that's really nice in the market. Now, you have a place that actually borrows you NFTs and a lot of crypto things, that collectibles actually, which you need. It's amazing because you end up getting it, and while the value increases, you can get your profits and do with it. It's actually very nice. Now, this can simply not happen without like for likes into the asset. Now, valuable unique assets requires reference in order to gain exposure to the underlying assets, so interest can accrue accordingly. Now, with enough borrowing underlying assets, so interest can occur accumulately. Now we're not borrowing, actually determines the warrant place. Interest can realize by the passive holding of an asset. Now this is resultant from the exposure to an underlying asset. Now in trading markets, the assets are commonplace and used to mirror an underlying asset, be it a stock or currency. Theoretically, most anything can be replicated in a synthetic manner, so long as there is no requirement for physical assets in order to settle a trade. Now one can trade an asset if the rules are in place that allows, all right, you know what I'm saying, that allows, wait, again if I get it wrong, as long as there is no requirements in the physicality in order, so one can trade NFTs in a single place that allows for mirrored assets to substitute for the real thing. In some, single assets can have virtual unlimited instruments, has permutations in legacies, finance, inbound. Now in crypto, actually SNX and synthetic create synthetic crypto assets. Now utilizing oracles for accurate price information, which allows for them to trade at great multiple and opening windows for derivatives, right, for derivatives. All right, so this has an amazing aspect in this to every single thing we're actually looking for, but we're not done. Actually, this is for the last one. Now these are the things that actually Paribus is willing to offer. Now they're willing to lend, borrow and stake synthetic assets. Now increase capital efficiency, earn yield from multiple resources, investment, flexibility, gain, exposure to additional assets. Now they also have to do cross chain. Now powered by Polkadot, passive holding can be applied anyway. Now the application of synthetic assets has given crypto an unprecedented levels of growth and earning opportunity. Now crypto synthetic allows individuals to gain exposure to commodities without having to hold assets. Now that is mind-blowing. All right, if you want to go into it. Now the final conclusion of this article. Now unlike NFTs, holders of a given crypto asset will be able to put their tokens to work by supplying the Paribus network and earning interest. Now this is passive and virtual, riskless and rewarded in the form of denominated token pair, where there is inherent value. This value can be leveraged as users retain upside of a given asset while creating additional returns via Paribus lending marketplace. This is a trustless and requires no active management on the part of the user. The speed and the fee structure of Cardano offers decided efficiency for any entity, DApp or token holders. Now if you don't know what a DApp is, I just call it decentralized app. Okay, it's kind of like your Binance, your KuCoin, your OKX and everything. So your DApps, right? And also we have the token holders. Token holders can also be your MetaMask, your how we call it, your MetaMask, your Trust wallets, even your Binance has an DApp. Okay, so the Paribus protocol provides revenue for supporters of a given asset and does so without restriction. That was an amazing read. All right, at least I got to explain a lot of things for you guys, and you guys get to understand what it's all about, the NFT and the synthetic assets of Paribus and what they're willing to offer and what they're willing to give and every single thing. And I hope you like the video. If you like it, please give it a thumbs up and also subscribe to the channel. It helps the channel very well. And I'm gonna link everything about Paribus in the description below, so you can get to visit us there and check out every single thing about Paribus. And I'm hoping to see you also in the Discord and the Telegram and every single thing. So I'm gonna leave you all here. I'll see you all in my next video. That's for me today. Peace.